crowded conference hall, applause fills the room. On stage, a young founder in a hoodie takes the mic. Behind him, the words appear on a giant screen. The stablecoin that can't break. His name is Do Kwon. In that moment, investors believed him. Billions of dollars poured into his idea, and in less than a year, it all vanished. $40 billion of crypto gone overnight, because the system built to hold itself together collapsed instead. Do Kwon was born in Seoul in 1991. He went through elite schools in South Korea, then moved to the United States to study computer science at Stanford, where he graduated in 2015. After college, he joined Apple, then Microsoft, where he worked as an engineer for short periods. He soon left to start his own company called AnyFi, which tried to build a system where phones and small devices could share internet connections directly with each other. The project never took off, but it revealed a pattern in his thinking, that software rules and distributed participants could be combined to replace established infrastructure. In 2018, he returned to Seoul and partnered with Daniel Shin, a well-known Korean entrepreneur who had founded the e-commerce platform Ticket Monster and the fintech app Chai. Together, they launched Terraform Labs, a company that would create a blockchain network with its own digital currency. They called the token Luna. The goal was to build a blockchain that supported payments. Merchants in Korea and parts of Asia could process transactions through apps like Chai, while Terra handled the settlement in the background. To make this workable, they needed a unit of account that would not swing in price every day, which led them to design stablecoins pegged to national currencies. Luna was positioned as the asset that would absorb price changes and keep those stablecoins balanced. By late 2020, the team introduced Terra USD, or UST, a coin pegged to the US dollar, and it quickly became the centerpiece of the entire system. Do Kwon became the public voice of the project, appearing in interviews and conferences and using Twitter to promote the idea of a decentralized dollar alternative. His blunt replies to critics and constant stream of posts built a following that saw him as a founder who combined technical skill with bold confidence. Blunt replies and confident tone pulled supporters toward him and kept critics in the mentions. Terra USD was built to hold a $1 value without any dollars in a bank. Instead, the system linked it directly to Luna. At any moment, 1 Terra USD could be swapped for $1 worth of Luna. If the price of Terra USD slipped below $1, traders could buy it cheap, trade it for Luna at the fixed $1 rate, and sell that Luna for profit. If the price went above $1, the process reversed, with traders minting new Terra USD from Luna until the peg returned. This constant back and forth was meant to keep Terra USD balanced around $1. The design relied on incentives, not reserves, which made it different from coins like Tether or USDC that held cash or government bonds in custody. The more Terra USD people used, the more Luna was burned out of circulation, which in theory made Luna more scarce and more valuable. That rising Luna price was what gave Terra USD credibility, and in turn the popularity of Terra USD drove more demand for Luna. At the center of this loop was Anchor Protocol, a lending platform built on the Terra network. Anchor promised yields near 20% on deposits, which made everyday savers see it as a safe place to park money, while professional funds treated it as a high-return instrument, all paid in Terra USD. By 2021, billions of dollars were flowing into Anchor. Every new deposit meant more Terra USD created and more Luna removed from circulation, which reinforced the idea that the system was working exactly as designed. By 2021, money was flooding into the Terra ecosystem at a speed that caught the industry's attention. The total value locked on its network climbed into the tens of billions, and Luna's market capitalization pushed it into the global top 10. In South Korea, integration with the Chai app meant ordinary shoppers were unknowingly using Terra behind the scenes to pay for everyday goods, giving the project a real-world footprint that most crypto ventures lacked. Investors noticed. Well-known venture capital firms backed Terraform Labs, and large trading funds started building strategies around Terra USD and Luna. The growing liquidity reinforced confidence that this was not a niche experiment but a major platform in the making. Supporters began to organize online as lunatics, a community that pushed the project's narrative with the energy of a social movement. Do Kwon encouraged it with constant posts, interviews, and appearances that framed Terra as a breakthrough in financial design. By the end of the year, headlines described Terra as one of the most important blockchain projects in the world. For many, it looked less like a startup gamble and more like the foundation of a new financial system. That momentum carried into the spring of 2022, when Terra USD briefly slipped a few cents below its $1 peg. It was not unusual. Small drops had happened before, and each time traders rushed in to close the gap. By buying Terra USD cheap and swapping it back for $1's worth of Luna, they could pocket the difference and the system snapped back into place. In the first days of May, many expected the same pattern to play out again, but this time the bounce never came. Withdrawals from Anchor drained billions in deposits, leaving less support for the peg. Instead of rushing to stabilize the system, traders began exiting and the gap between Terra USD and the dollar widened. The mechanism that was meant to restore balance only made the situation worse. Every Terra USD leaving the market had to be matched by minting more Luna. The supply ballooned from millions to billions of tokens, and the price of Luna crashed just as Terra USD needed it to hold. The two coins dragged each other down in a feedback loop. Terra USD slid from 90 cents to 50, then into pennies. Luna, once trading above $100, was suddenly worth almost nothing. On exchanges, the collapse looked like straight vertical lines downward. On social media, people posted screenshots of balances evaporating and accounts locked by halted withdrawals. In less than a week, more than $40 billion in market value had disappeared. Some begged others to hold, some admitted their savings were gone, and others posted suicide hotlines as the scale of the losses sank in. South Korean authorities opened investigations, while U.S. regulators began circling. Funds exposed to Terra froze withdrawals, and the crash spread fear through the entire crypto market. Even as billions vanished, Do Kwon insisted publicly that he was not hiding. On Twitter, he told followers he was heartbroken, but claimed that Terra could be rebuilt. Behind the scenes, investigators were already closing in. South Korea issued a warrant for his arrest. Interpol added his name to its red notice list, alerting police worldwide. Kwon appeared in podcasts and interviews, speaking calmly from undisclosed locations, repeating that he was cooperating with authorities while refusing to say where he lived. Each appearance only added to the mystery. Months later, his trail ended in Montenegro. Airport staff caught him traveling on forged documents, and local police took him into custody. In his bag were multiple passports and laptops. He fought extradition for months through Montenegrin courts. In December 2024, the Montenegrin Justice Minister issued a decree to send him to the U.S., choosing the American request over South Korea's. The Constitutional Court of Montenegro rejected his appeal, clearing the path for extradition. On December 31, 2024, he was officially extradited to the United States and appeared in court in Manhattan, where he faces federal fraud and money laundering charges tied to the collapse of Terra and Luna. Terraform Labs has declared bankruptcy and is gone. Investors who lost savings are still chasing lawsuits across multiple countries, but most know they will never recover what disappeared. The only thing left is the question of accountability. Do Kwon said his stablecoin could never break. A year later, he stands in a New York courtroom, accused of breaking billions.